share. So thank you very much for joining us in our Keep Your Money Liquid while earning higher returns webinar. And I have a guest speaker here that is no stranger to most in the financial industry, has done some incredible things with regards to funds, family funds, management, raising capital, and the whole shebang. So I don't want to steal too much of his thunder. I want to go ahead and turn this over to Sir Derek, who's going to go through this incredible opportunity for everyone to earn higher returns on their money while still keeping their funds liquid. So, Sir Derek, I turn it over to you, and you can go ahead and share your screen, okay?
Cool. Well, perfect. Well, listen, first of all, thank you, Jan, for making some time for me to present our opportunity and everything. I know we spoke a little bit before. I kind of did a little bit of presentation, maybe about a month or two ago. But we were super early on, so to kind of give you guys updates on kind of where we are, um, and just the timeline that we have to launch, and then also talk about the reserve investor opportunity. You can go to the next page. Okay, so honestly, the purpose of this meeting is really to talk about the reserve investor opportunity, but honestly, how I really structure these calls, I do a little bit about myself, a little bit about the company, the mission, model, milestones, and just overall the opportunity. All right. Yeah, no, you're perfect. You can go ahead, and you can go to the next one. So, who am I? My name is Sir Derek Phantomive. I am a financier and deal maker. Honestly, that's just a fancy way of saying that I raise and provide capital and I negotiate mergers and acquisitions. So, I've been in finance for about 20 years, 17 to be exact. Um, I started off, my wife and I, we actually met in college, and we met in a venture in college, and then I started an investment club, and that's when me and her kind of really got to know each other a little bit more. We had a couple of investments that we was looking at, and a couple of ventures, and insurance was the first venture that we embarked in, and we did that for a couple of years, built that business up. We were doing insurance sales. Uh, Financial and estate planning. We did that for maybe 3, 4 years, and then we ended up selling that business. Um, and then she went off into marketing, and then I stayed in finance, where I became an independent loan broker. Um, and as an independent loan broker, at first you're just really making connections, and you're just connecting capital to, connecting borrowers, and you're connecting lenders, and then but eventually that evolves into you putting together packages, you um, consulting on maybe the numbers or the structure, and then next thing you're just fully negotiating deals for them. I focus more on the buy side, but I've done I've raised about almost $1 billion now, and I have worked on $3.5 billion worth of deals. So I've been an entrepreneur all my life and everything, but just I love the industry. So when me and my wife were having our chat at the end of last year, we were chatting about, like, hey, are we going to pursue a banking license, or like what are we going to do? And then we ended up you know looking at the we ended up looking at the economy. We know a recession's coming, or at least an economic downturn. Everything, maybe not a full recession. Then we end up looking at the incoming administration. We're not, hey, we're not sure. We wasn't sure at the time if, like, hey, if things are going to be bad, things are going to be good. What exactly are they doing? The only thing we know is that it's about to be interesting. And then, we decided to we also looked at the market, where, from the retail model, we looked at it and was like, man, there's a lot of players in the space. There's a lot of people that's going after the retail depositor, the retail investor. And it's honestly just oversaturated. But I we decided to, well, listen, I'm already solving a problem for deal makers. And so that's when we decided, hey, why don't we just build a bank around this concept of deal makers. You can go to the next one. Because honestly, deal makers deal makers represent, so independent deal makers, and When I say independent deal makers, that is your small cap real estate investors, your small cap private equity investors. So think uh, private equity buying or people buying businesses for less than $3 million with about half a million to 1.5 in EBITDA. That's probably where you look at like the lower middle market and everything. And so you have that search funders. Search funders are basically where they don't have the money, but they're typically the operator of the operating side of the private equity. And then of course you have hard money lenders or private money lenders. So those right there is what when I say deal maker or independent deal maker, that's what I'm thinking. Manpower wise, the independent small deal maker represents about probably 90% of the industry. It's just people like us, people like Jan and myself and people like Victor. But they represent such a small portion of the actual transactions. And honestly, the reason why deal makers don't close more deals is simply because of the three things that's on the screen. It's education, them not really knowing how to properly structure a deal or underwrite, a deal, or even know where to even go to get the proper financing. Deal flow is number two, because hey, listen, it's very hard. Even large firms have a hard time finding deals. So they have to do a ton of marketing and stuff like that to find deals. And then last, but probably most important, is capital. And it's not capital just for the sake of capital. It's literally strategic capital. And I break that down into three different categories. I call it TEAG. You can go to the next one. I call it TEAG. So that stands for table, escrow, and gap funding. So now table funding, that's for your double closes. Most of the time you're using real estate, but it's also using private equity. And you can also use it in very interesting ways to extract value out of assets or businesses and things like that. Escrow capital is more negotiating capital. So, when you're looking to buy a company or looking to buy a property, you got to have some type of earnest money. And a lot of times, especially when you're looking to put together creative deals, the more earnest money you have to the table, really, I would say the more the seller ears perk up, and they might, they'll take you serious. They'll look at you as a competent person and stuff like that, or at least a person that has some financial backing and everything. And then of course, gap is the equity between, or the equity you need to bring to the table, or what the difference or the gap that the lender isn't willing to basically put up and everything, because no lender is willing to put up 100% of it most of the time. All right. Oh, next slide. So yeah, so what we decided to do is to come up with a concept, Dealmakers Bank International, really where our goal here is to really build a bank strictly from the ground up, strictly for deal makers, by deal makers. Our mission is to be that strategic private partner, or offer our deal makers strategic private capital in order for them to close more deals. Next slide, please. And how we do that is this. We offer them a line of credit, right? We offer them a line of credit. I call it, our new branding for it now is really a TEAG credit line. So we offer them a credit line in which they could do, the table, escrow, and gap funding, but also it's super flexible capital as well. We're deal makers, and we do our best to try to get as creative as possible and everything. But you have those other problems. You have those other problems of education and deal flow. So what we decided to build here was really an ecosystem, to solve more than just the capital problem, but to solve the education problem, to solve the deal flow problem. So when it comes down to education, we decided that we were going to launch a Deal Makers Club. So this is a club where people can get educated on how to put together deals, educated on how to raise capital and find, and underwrite deals, and just overall, just the whole deal making process and everything. You have deal flow, same thing. The Deal Makers Club is designed for deal makers to come in and source deals as well as sell their own deals as well. Right. So, Deal Makers Club is a private online community that it'll be online, but also semi-online as well, because we'll do quarterly meetups. We'll do quarterly meetups really around the nation in a couple of different markets. Capital, again, we're providing we're providing capital through the bank, through DMBI, with the T credit line. And then marketing. So I have marketing down there. Now marketing is really, that's for us. That's for the investor to understand, hey, how are you going to source deals? Because as we know, there are deals all over the country. There's deals all over the world, but there's deals all over the country. But there's no amount of marketing that you can do to profitably reach that 68-year-old plumber in Kansas that has a $2 million revenue business, a million plus EBITDA, and who's ready to retire. There's no way that you could properly do that. There's no way you can market and properly be able to find that deal and do that transaction, right? So what we decided to do here is to have a program that's what the bank called the Deal Makers Banking Club, where we will offer them basically a private label solution and everything. So the earlier when I said our mission, where really what we do is we provide deal makers with strategic private capital. The two words that you really got to really focus on is strategic and private. Strategic being the T credit line, and then private meaning that we have built our entire business model, or at least the core function of our business, around the private label model. And when I say private label, I truly mean private label. Jan, I'm sure as you and many other people probably has been on here, you've probably seen that, know of banks called Flagstar, or you can go to private lender link, and you can look at any of the white label loan products and stuff like that, right? I've also had a white label. I've had a white label brokerage before, where where we did tens of millions of dollars. But one thing that honestly used to really piss me off, and excuse my French, it used to make me really mad, is because in the terms and conditions, it literally gives away it really gives away the entire model. Or if somehow you're doing a transaction with the bank, and then you go to the bank site, they'll probably have something about their white label and things like that. So that used to make me mad. So when we came up with this concept about like using this for marketing, we decided no, we're going to truly develop a private label framework. And basically how that particular portion works is, you will, as a deal maker, you can get a subscription with us, where you get a line of credit. How it's structured is that you open up, you got to have a business. You open up a business account with us, and we make a deposit into your account. Now, there's restrictions on that and everything. Now, of course, using our systems, we'll have an automated system for you doing table and escrow financing. But then, of course, gap funding has to be a little old school. You got to underwrite that fully and everything. We're limiting, that isn't our full business model, but that's just a core of our business model. But we are limiting the number of I call them client partners in the Deal Makers Banking Club to about, probably in America, 5,000, 4,000 to 5,000 is what we're looking at there. All right, you can go to the next slide. So again, these are our financial products. So you can use the T line of credit in order to do transactional escrow or table escrow and gap funding. You can go to the next one. And then also our other services that we'll have depository services. One thing that, our goal would be in 3 years to have 5,000 core client partners that's doing, $1 million to $3 million, right? But then also to extend and have their bank with us as well. Having their businesses bank with us. So we're going to be a high reserve bank. We're going to, hold an average of 70% of deposits. So, as you know, banks can hold as little, well, really as little as zero, but as little as 6 to 8% of deposits and everything. We're going to be a lot higher because I am a student of JP Morgan and Jamie Dimon. I love the idea of having a moat. So we will for sure have a moat as well. So when it comes down to deposits, either you can have an option where we don't where we don't use any of your funds, meaning there's no flexibility there, it's 100% reserve, or you can have it to where it's just standard, and we will hold on average 70% of deposits and everything. And you can also, for larger, if you have larger deposits, meaning if you have like a company and you have $2-3 million, we have a depository network that we can put your cash in that spreads it out over the network. And you can go up to 10, well, it can go up to $100 million, but realistically, for us at the moment of launch, probably in the first 2 or 3 years, we'll probably cap that off at like 10-15 million dollars. Investment banking services, so raising capital, just like how Jan is doing. We're looking to build out a an investment banking arm and everything. And then, of course, you have Treasury Department. You have Treasury Management. And that's really to help you manage your liquidity, make sure that you're managing your business, and you're always liquid. Because the number one reason why businesses fail isn't really a lack of opportunity or sales or things like that. It's honest simply because they run out of money, because they don't plan for it. Okay, next slide, please. All right, so here are the numbers. These are high level numbers. These are pretty high level numbers. We're looking at revenues. We're looking to be profitable the first year because we already have $105 million of pre-sign up. I'm kind of jumping around here, but we already have some pre-sign ups. We already have some deals in the pipeline and everything. So we're thinking, our revenue numbers would be, 12 the first year. We're looking to keep our expenses low because our team, our stellar team is it all understands the mission to get profitable as quick as possible. But you got 12, 24, and we think we'll be at like $40 million by the end of our de novo period and everything. And asset wise, we're looking at 30 million assets. Kind of already have stuff like that lined up. And then by the end of year 3, we're almost at $300 million of assets. All right, next slide. Our traction, like I said, kind of jumped the gun there, but we have pre-signups. We did a small word of mouth campaign a couple months ago, where we were asking a couple groups that we work with, hey, what do you guys think about a Dealmakers Bank, a bank that's strictly for you guys and everything? And we had a ton of signups. We had about 44,000 pre-signups and everything. Now, not sure what that conversion rate is going to be, but the interest is there, right? For our professional groups, like I stated, we have $105 million of pre-sign up business, which we think we're going to have about a 50% conversion rate. And at a 1.2% subscription fee a year, we think that we're currently probably sitting at $500,000 to $1 million in pre-revenue. Everything. You have the Dealmakers Club. We did a small little word of mouth campaign through people I know really here in the area, and who had people that they asked and stuff like that. We ended up getting about 200 inquiries to join that. And then the regulatory traction. Typically, when you are looking to obtain a license, you put together your team, you put together a business plan, you engage with regulators. Once you gotta wait about 3 to 4 months to get approval, and then you get your approval to organize, and then you have about a year to kind of move forward with that. When it comes down to our traction, what I decided to do is, what my wife and I decided to do is go a little bit backwards. We put together a business plan. We engaged with regulators. We raised a little bit of capital. We have about $4 million in soft commitments. 4 to 5. Well, it's about $5 million in soft commitments and everything. And then we also did the pre-signups as well, so $105 million. And yeah, now we're putting together our team. We have a pretty stellar team that I've put together over the last really realistically month, and and now we're just onboarding and things like that. Okay. Oh, but then also, sorry, I forgot to add this. We are looking to apply because I actually didn't update this, and I apologize, Jan. But we are also looking to become a bank holding company. We're looking to apply for that in the next 3 weeks, 2 to 3 weeks, and everything. We're just trying to get a couple things lined up so that we can move forward with that. And once we become a BHC, well, it actually make the it would actually make the reserve investor opportunity actually a lot more straightforward. All right, next slide. All right, so let's talk about our team. So you have myself, Sir Derek Vanderhaaf, my wife, Lady L, a friend of both, a mutual friend of both me and Jan's, Curtis. He's a board member. Jan, we have to figure out, what are we gonna do, brother? Next slide. So we've already picked our CEO, CRO slash CCO. Um, our credit risk officer, and also our chair. So our CEO is a 30-year veteran. I mean, he was also a regulator as well at the FDIC. And he's been, in compliance and risk management for banks, large, small and larger regional banks for the last probably 20, yeah, probably for the last 20 years and everything. That's Eddie. You have Jeffrey, who is our chief risk officer and compliance officer. He's been in the industry for 32 years, where in the risk management side and also the compliance side as well. Stellar guy. He's worked for a couple companies that has went public. He's actually helped establish a de novo before recently, that was in the crypto space. You have James Fox here, who's our chief credit risk officer. He has built risk programs or credit risk programs for Deutsche Bank, Sumitomo in Japan. I mean, he's just, as I would call him, he's an OG in the credit game for larger companies, for larger banks. We have our chairwoman, who's her name is Gita. She's 35 years in the financial service industry. Well, she served on Wall Street for a couple of years, and then she ended up becoming a regulator. Currently, she's serving as a senior national bank examiner at the OCC. You can go to the next one. So we're excited to have her as the chair. We have for our CTO, her name is Sunny McLean. She is a 30-year military veteran, but also technology veteran as well. She's built systems for the Pentagon, the government, and various different things. She's done a lot of U.S. Foreign projects where she built systems for countries like Saudi Arabia. But she's also working on in the corporate side. She worked for Dell. She was the head. She was head of innovation and market development for Dell computers, or Dell Technologies, I guess is what you call them. And she managed $1 billion budget there. We have our CIO, which is our chief information officer, Peter Hastings. He's 35-year veteran in as a bank executive in information technology and risk management. So he brings a lot. I mean, he's worked for a lot of companies like Wells Fargo, Citi, and a couple other larger firms. We have Kevin O'Connor. This is our CFO. He's been in banking for around 40 years, about 40 years now. He started off super young in banking, and started off as a comptroller, then evolved that into a risk manager, then ended up becoming CFO. And he's actually been CEO of two banks, and took two banks public as well. And then we have our newest member for the moment, Tom Crowder. He'll be on the board and our investment officer, so probably chief investment officer. But he served as a CFO for numerous amount of boards, as well as investment firms, and they've taken, I believe, if I can remember right, it's either 3 or 4 banks public. They've launched, I think, about 6 de novos through their fund that he was a partner on. He's been a lawyer. He's been a couple of different things. So just an overall stellar team, and we're that we put together over the last month and everything. You can go to the next slide. Now, these are probably the last positions that we're looking. Bank Secrecy Act and Money Laundering Officer, we definitely need that. So we are starting to interview people, not this week, but next week. But that's something that we need later on, if I'm being honest. General Counsel, we are in our second and third calls, interviews with people coming this week. What is this? The week of the 29th of June. But I basically know who we're going to go with for the general counsel. We have 2 independent board seats. Now we're keeping one of those board seats open for investors, so investor group, if they want to have a board member and whatnot. And actually, one of those board seats might actually be going to actually another previous bank CEO that has launched a couple banks. And then we need to always have our second legal counsel. Is what we look for. And honestly, I already know who I want to work with on that one. All right, next one. So let's kind of dive into the opportunity, because that's essentially also what we're here for. So we have 2 pools of capital that we are looking to raise to raise funds for. Now, the operational side is, of course, we're going to use that capital. That's the capital that we're going to apply for the license, have things lined up like our offices, and maybe a 6-month run rate and things like that. Actually, to kind of jump up, because I didn't update this before. I didn't fully update this, but where we are looking to become a bank holding company. So that operational capital, we probably need to raise a little bit less than that. We're thinking probably $5 million at most, where we'll actually leverage our balance sheet get a bank holding company loan, use that line of credit to run operations, prepay for certain things, so that we know we have a 3-year, 4, maybe even 5-year run rate, where we don't, even if we didn't make any money, we have it, and then we'll use that capital from the operational side to kind of service that debt and whatnot. So that's one side, right? And then you have the reserve investor side. Really, what you guys are mainly here for is to understand that. But so we're raising capital to basically serve as our tier 1 capital. So we're not looking to use that capital. That's just capital that's like, as they would consider it, capital of last resort and stuff like that. But I mean, if you really look at our business model, there's virtually no counterparty risk for 2. So meaning the table and escrow, and we would use we would be very mindful of how we do our gap run our gap program and whatnot. So next slide, please. All right, so this right here was kind of going a little bit more into it and everything about the operational side and everything. So we're looking to get an operational line of credit. 2-3 years is probably static in bank expenses, like our core banking system. So our third party, prepaying for our third party core banking system, as well as putting together a budget for our own core banking system so when we start doing deposit debits and credit cards and stuff like that, then you can they'll bring the cost down, and we'll actually save more money. So it might cost a little bit of money up front, but it actually puts us in more profit sooner than later, as well as servicing the debt as well. For operational investors, I just kind of want to our target returns and buyout for that is a 3x. So we're looking at a 3 to 5 year option. So when you If you decide to become a operational pool investor, what you'll get is you'll get equity, but then you'll get repurchase contract at 3x everything, because we'll be looking to buy back um those shares from you in 3 to 5 years. We think we'll probably definitely hit it in 3 years, or maybe even sooner. But we'll have a guarantee of that 3x buyback value. Okay, next slide. So what we're all here for? So the reserve investors. So I explained it a little bit. Basically, what we are looking for the reserve investors is that you guys are our tier one capital. So how we structured this is we structure in a way to where you just either open an account where at your bank, or even we can even pick a particular bank like BY and Mellon or JP Morgan or even US Bank, where you could open a reserve account there. You make those deposits and you be the custodian of that. Now, we will possibly have to get approval, since we are looking to be a bank holding company. We possibly have to get approval from that from the Fed. I don't see a problem with that, because last time, if we just was to go with stateside, we could, they have no problem. They have no problem with that and everything, because they just want us to be able to, send a Swift message and things like that to be able to check whenever we do our examinations. The Fed's a little bit different, but the reason why we're instead of just not going after the bank holding company and just kind of doing that, so we can just operate, so we won't have to go through the approval process with that, is honestly because it would put us so further ahead, because you have correspondence banking relationships that you have to establish and things like that. So, us becoming, a BHC, we can actually, we'll be a Fed member, and we can actually forego having to have correspondence relationships. So it puts us, maybe it might even put us a track on like maybe a month or two behind in launching, but it actually puts us ahead 3 years and a bunch of profit margins. It put us ahead by a bunch of profit margins. Okay, next one. Now this model is something where I've seen it done. It's more of a Swiss model, as I call it, because that's the first time I ran across it during a transaction for a client, and also being invited to be a reserve investor. So normally, I would say at worst, probably at worst, if we don't get the approval for that, meaning they want us to hold it in a Fed account and also in our accounts that would essentially be parked at the Fed. Basically, how we would structure it is you would you would have it as an investment. We'll create a custody account, and you have access to that, and you can have access to to the capital at all times. We will look for a 45-day kind of heads up, so that we know to either we need to recapitalize ourselves through you know either raising more equity from other investors, or we have the funds. So now it's like it's fully unlocked and everything. So that's really how we're looking at it. So probably the first 6 months is probably, honestly, it's probably going to be looking at like, oh, hey, give us like 60-day heads up and stuff like that, just so we can get the capital. And then as we start bringing in more revenue, we're basically kind of filling up our own pool of capital, and everything, our side capital. And once we kind of have that, where it's kind of like, oh, we have 10 or 15 million dollars in retained earnings, then at that point you could withdraw your capital really at any time. It's just basically sitting there in the bank account and whatnot. Okay, next slide. All right, so the process, how the process looks. Again, it would be look a little different, but normally, if we get the approval for you guys to keep your own capital in like a reserve account, so either you would open an account with JP Morgan, BY and Mellon, or US Bank and everything. You just create a sub account. But then also, or the bank that you're currently at, you would just simply create a sub account, relabel it, as a reserve account, or you can open a reserve account if your bank has it. So like a full benefit of, and you would give us view only access. So we can't go in there and touch the funds and things like that. And then so at that point, so that whenever the regulators whenever the regulators do an examination, they can either we can send the packet to them, or they can do a Swift call and whatnot, or a Swift message and whatnot. Okay, next slide. And for those who don't know what Swift is, it's a Society of Worldwide Interbank Financial Telecommunications. So it's just a messaging system. Just say like, yes, they have this money there, and it's unencumbered. So there's no UCC filing or things like that on that particular bank account and whatnot. So that's why it's very, very important. It's very, very important for you guys to keep your funds liquid and unencumbered and everything. That's the trade-off. So it's not risky to you guys, but you guys, again, you would have to keep it liquid and keep it unencumbered. Okay, next slide. Okay, so now I know a lot of questions kind of come around. Well, then how are you going to lend out money? Well, the great thing about how we have and I hate to say, I really, really hate this because I feel like it goes into conspiracy theory realm. But essentially, when you're a bank, you have you have a license to print money. Hey, be quiet. So when it comes down to it, when you look at Teague as a whole, so table, escrow, and gap funding. Well, table funding, the mechanisms really, we're waiting for funds, the back end mechanisms that we're waiting for the third party buyers funds to come in, right? So you can do either promissory note to the other bank, or you can do overnight funds, things like that. But typically close in the same day. So how it looks on the back end is that you get the funds for that, and then you send that out. That's one reason why we also want to be a Fed member as well, because we'll instantly get those funds. There's no like clearing time and whatnot. Escrow, most of the time, I would say 50 to 75% of the time, we're going to be the escrow agents on it. So it's kind of like saying that there's just numbers on the computer, but we'll send a promissory note. It's basically establishing a promissory note and everything, so they can pull that capital once it's gets past the inspection date and whatnot. So where it can be claimable, and then they could actually claim that from our Fed account and whatnot. And then of course now gap funding. Of course now we will definitely need funds for gap funding, and that can really just come from a line of credit that we can leverage using our retained earnings, our Tier 1 capital, things like that. So we're not too particular worried about that, because the gap funding will be a build up. So if you have $100,000 line of credit, you don't have 100% access to that to do gap funding. You have 10%, and then you do a small transaction and things like that. And you have to build up trust over the time to get it to where it's 100% able to be used for gap. All right, next slide. So what are we looking to raise? We're looking to raise $10 to $20 million. Now I know last time it was $10 million, but we are thinking about it from a different perspective, since we're looking at becoming a bank holding company and whatnot. I still think we can definitely do it with 10. We could definitely do it with 10. That's not a problem. But 10 to 20. However our campaign, whatever much capital we raise on our campaign, whether reserve funds and operational funds, it just is what it is and whatnot. Okay, next one. All right, let's talk about capital structure. So we're selling at $1 per share. I mean, I just think $1 per share is easier than 25 cents or something like that. And you have to buy a minimum of 500,000 shares. Interest accumulated, I mean, there's two options: simple plus compounding and whatnot. To be honest, there's probably more or less compounding than anything. So we'll pay 10% a year for 3 years and everything. Now we are, the later, the earlier you get in, of course, locking in at 10%, and the later, coming in kind of at the tail end, there's a little bit of sacrifice there, because as we're going through the process, I mean, and knocking things out regarding the bank holding company and things like that, it really it's I guess it disincentivizes us a little bit less to pay more for capital that we can't use, if hopefully everyone understands that and everything. So getting in earlier, hey, you're getting in earlier. You're our financial backer, things like that. Of course, we'll pay your premium for that. But as we get closer to launching and things like that, I mean, last capital in is kind of like, hey, man, it's you should have been here a little bit earlier, especially if you are on this call or reviewing this call at a pretty early date, because it's June 29th right now. All right, next slide. And then let's talk about risk factors, because there are a risk in everything. So for us, I would say for reserve investors, your risk is really, I'm gonna go over that first, and then I'll go over the operational side. Licensing risk. I mean, you could pull out cash and stuff like that, and be excited for this, and we not get the license. They just kind of like, hey, we don't like you guys, everything. As we see, our team is stellar, so I that's less likely to happen. But hey, hell, you never know, right? Now we would just move to another jurisdiction, but you have delay or straight up denial for that. Regulatory risk, the regulatory framework could change. We have a new president, so the framework could change at any moment and everything, due to the market, or even due to a new person that's heading the Fed or something like that. Liquidity commitment risk. Now, this right here is like, you must maintain unencumbered and liquid funds for the 3 years and everything. So honestly, if you really look at that, if something happens and you need to draw those funds out and stuff like that, where we are completely understandable to life happens and things like that, to where you'll need your funds and whatnot. We would never want to getting away for someone in a crisis and whatnot. But hey, your returns, your returns might suffer for that. So you might be disqualified from getting the full 10% and whatnot. You have the return risk. The return risk is, if you really look at it, right, we have pre-sign up, we have a stellar team, we have a lot of different things. I mean, I do deals all the time. I get like literally over $100 million worth of deals that are fundable deals that that we could do and make fees off of, or interest off of, things like that. So I'm not really worried about that. But hey, that is a risk and everything. We might not perform like we think we're performing, and that you might have to wait a little bit longer for that, that 8 to 10%, that was promised and everything. Your cash isn't at risk, but I mean that interest, could always be at risk. Bank structural risk. I mean, that's very similar to regulatory risk, like maybe our business plan isn't as great as we think it is, and then we have to switch it up, or we have to like um recapitalize ourselves, or just reorient the business as a whole. And then you got custodial risk. So that's really more technical issues and stuff like that. So where like, oh, if at any moment the regulators could, send a request or request a Swift message and stuff like that, and there could be a technical issue there. And now of course technical issues or even if they do happen, you can kind of explain those away and you can do stuff like that. But I mean, hey, you just never know. You just never know. I look at companies like SnapFi that you know what people are. There's hundreds of there's I think over $100 million, or 80 to $100 million is kind of like in a kerfuffle right now. It's not gone, but it's at the same time, people don't know. So you always have like technical risks and stuff like that in regards to like, for you guys, in regards to us having access to be able to see the funds, our view only access and stuff like that. So yeah, so those are all the risk factors when it comes to the reserve investor. Now, when it comes down to the operational side, of course, hey, your principals, your cash is at risk and whatnot. Now, I will say this: banks have a less than 2% failure rate. Especially when you're a bank holding company, you have, which we're looking to establish, everything, or which we're going to establish. You always have access to funds and things like that. You can always sell equity in the bank holding company to raise more capital and stuff like that. How we're looking to raise, how we're looking to raise capital for this actually will be under the bank holding company. So you always have the freedom of the bank itself actually being able to raise capital individually for that. So actually us having a bank holding company actually makes it less likely you have that principal risk and whatnot. But it's still there. It's still there. But there's many different exits that we have from just cashing you out, over time, everything over, buying you out over, in that 3 to 5 year period and whatnot, because, things just go well. And then if they don't, we can still buy you out by using a line of credit, because I am overly conservative in the sense of I do not like debt. Um, I do, I like prepaying for things, so I like discounts. My wife is a stickler for, for the discounts and proper money management and whatnot. And then of course we have a stellar team that's also, and so when I give them the go to say, oh, hey, this is our goal. We're not trying to, we're not trying to be over leveraged and stuff like that. So let's have a moat of deposits. Let's also have a moat of like actual reserve capital as well. And then we can always make make money from investing in pretty safe assets, if not holding it in cash. And then also just being really a deal maker as well. I know Jan to tell you, if finding deals where you can have an outsized return is what we do. So yeah. So next slide, please. Yeah. So I mean, in conclusion, we are looking to raise $10 to $20 million from reserve capital and operational capital. We have, our goal here is we provide strategic private capital to deal makers. Strategic being we provide table, escrow, and gap funding through our Teague credit line. We provide them education and also deal flow through our Deal Makers Bank. Our Deal Makers Club. We have a private label model when it comes down to getting into the nook and crannies of really the marketplace to find those deals and be able to do those transactions and be a part of those transactions really at really no cost to us, or a very low cost to us. Everything. We have a subscription model. We have pre-sign-ups of $105 million, which we think will have a 50% conversion rate at a 1.2% subscription fee. We have quite a bit of deals in the pipeline ourselves to, buy and transact and make money off of. So, and then we have a stellar team. Team on average has 30 plus years in banking, risk management, investment banking, and technology. So these are veterans of the game. I mean, it's so funny because even my CEO will be like, "Sir Derek, where the hell are you finding these people at?" and everything. So I would say we're definitely looking for investors who are looking to make a move, you know, uh, and looking to make a decision quick. Whether it's reserve investor, just being like, hey, this is definitely something that we want to do. We want to lock in that 10% for 3 to 5 years, and our capital is not going to be at risk, so that's great. To our operational investors, where it's kind of like, okay, hey, I see what you guys got going on here. I trust that you can, you know, I trust that you can do what you say, you do what you say you can do. And we're excited to help you out. And we're also excited to get a 3x return in 3 to 5 years and everything. So that's really like beating the market by, beating the market's ass, if I'm being honest. So, that's just where we are. And you listen, thank you guys so much for, for your time. So I will take any questions, and I'm an open book, so you can ask me really anything. I'll let you know what I know, and I'll let you know what I don't know. And if we gotta think about it, hey, we'll figure it out.
Awesome. I appreciate Sir Derek. Very thorough presentation and good stuff, man. Got multiple ways of opportunity here. So, any questions for Sir Derek from this presentation that he can help you with? Any questions at all?
Yeah, so Derek, quick question
Yeah.
for you on the $10 million that you're looking for. How much of that